Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders. So the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong area of previous monthly resistance, which is now turned support. In fact, from here, all this previous move to the downside was created. Again, here, the market tested its zone and rejected it to the downside. Again, here, the market tested the area and rejected it to the downside. And now we can see how we just had a break back above this level of previous resistance, which is now turned support here. And in fact, what we can notice is that the market has just tested this previous monthly resistance turn support with this wick here, has already started rejecting it to the upside. And in a situation like this, we could expect more bullish continuation to be created away from this area. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, we can notice how also here we have a very clear impulse followed by this correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.618 and 0.786 Fibonacci retracements lining up exactly inside of this area, which combined with the fact that we also have previous resistance turned support inside of this area, which we can clearly notice here. In fact, from here, all this previous move to the downside was created. It means that essentially, since we have both these levels lining up with this previous resistance turn support, we actually have a confluence of support inside of this area because we have multiple levels of support all lining up in the same area of price. And inside of a confluence of support area, you do expect to see institutional longing. Therefore, that would further increase the probabilities that from this area, we could expect more bullish continuation. So at the moment, both the monthly and weekly timeframes seem quite bullish. Dropping down on the daily time frame, what do we see? Well, from a daily standpoint, I did speak about gold quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this rejection to the upside. And in fact, that is exactly what the market gave us. Then we got this impulse and correction. From here, I explained all the reasons for which we could expect the creation of this higher high. And again, that is exactly what the market did. Then we had the creation of this M pattern. From here, I explained all the reasons for which we could expect this impulse, correction, and continuation to the upside. And again, I explained all the reasons because after this impulse, we could expect a move to the upside for the completion of this M pattern in the neckline. And again, that is what the market gave us. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. Now, at the moment, what do we have? Well, from a daily standpoint, it is quite important to notice that we just had the break of a quite significant daily structured zone. In fact, from here, all these previous rejections to the downside were created. At the moment, since the market has broken back above the zone, all this previous resistance is now turned support at this level. So what we could expect here is a potential retest of this previous resistance turned support and then to see a rejection to the upside away from this level. We can also notice how from a pattern perspective, we have a very clear impulse. And at this point, we could expect the start of a correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.618 and 0.786 of the Fibonacci taken on this impulse candle. And what we could expect at this point is a retest of this confluence of support area before then getting a rejection to the upside. So essentially, we have quite strong confluence of support here from a daily perspective that if the market will go and test it, we could expect to see some institutional longing happening inside of this zone, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. Now, why am I speaking about more institutional longing? Because if we go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds, so the big players in the market are doing, and we check the data precisely for gold, what we can see is that with the last reports, net positions have been aggressively getting increased. We went from having 71.4K net positions all the way up to having 201.3K net positions. So we just had a strong increase of the net positions with another 7,400 longs added with the last report and 5,600 shorts getting closed just with the last report. And if we look at the long run, we can see how longs went from 220.3K from an institutional perspective all the way up to 280.9K, and shorts went from 148.8K from an institutional perspective all the way down to only 79.6K. So clearly institutions have been increasing their longs and decreasing their shorts. Now, it means that they have been positioning themselves to the bullish side for gold because they expect more bullish continuation for it. So keeping that in mind and going back here to our analysis from a technical perspective, if the market will go and retest this confluence of support, we could see more institutional longing that would increase the probabilities of a potential move higher. So how I could be approaching this potential move higher? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, what I could be doing potentially is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to me one of my valid entries, at that point, I could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more and accelerate your growth as a trader, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and in my bio. Here, you have the possibility to gain access to my complete all-inclusive mentorship program. You will see here a complete video showing you exactly everything that you gain access to. And if you continue to scroll down on the website past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So I really suggest that you go and check it out as soon as possible. The link is both in description and in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.